Good morning, all in crypto family. Welcome back for another YouTube video. This is going to be a daily cryptocurrency market update that comes out every single day at 1 p.m. UK time. We are going to be talking about the January effect, ladies and gentlemen, and what this may mean for the crypto space. We are aggressively putting out videos on this channel. Even though I'm an investor and a trader by trade, that's what I do for a living. This channel is really about educating people on what is a very exciting space and a technology, blockchain, that's going to play a massive role in all of our futures. So we're really going to start focusing on educational content, but these daily cryptocurrency market updates, really, we do cross-market analysis. We try and figure out where the cryptocurrency market is going in the short, mid to long term. I still do think that this is a bear market and there is always the possibility of lower prices. But we were bearish for pretty much the whole of last year, and we've done very well from a trade perspective in terms of being out of the market and in stable coins. And really this year for me is about looking at potentially redeploying that capital back into the cryptocurrency market. But I'm not there yet. Now, we'll keep you guys up to date. Of course, for anybody that wants in-depth analysis on this and what I'm buying, where I'm buying, feel free to join my Patreon. There's a link in the description. But today we're really going to focus on the January effect. So I still think we're in a pretty nasty recession. For me, it's very simple. We're in the opposite of what we were in from March 2020 onwards, when they basically just increased the money supply, right? We're in the opposite of that. So when money is free flowing, people are taking out debts, everybody's happy, things tend to go up. We're in the adverse of that, where people are going to start feeling and are already feeling the pain. However, there is a large amount of capital that is sidelined, waiting to get back into markets. And for me, it's all about front running that. So I don't mind being a little bit early or a little bit late. But what I do mind is losing my capital in terms of its overall value. And we've done very well last year in keeping that value. In fact, I know that there's many people out there that wanted to buy in every single dip that we had, and we pretty much stopped people from doing that. Even though this is a non-advisory channel, I'm not a financial advisor, we have been very spot on in terms of market direction, and we do now have a series that's going to come out at 3 p.m. UK time every single day. So I think that's around about 9 o'clock, maybe 10 o'clock Washington time, where we are actually looking, and we're going to track Bitcoin's price every day and do technical price analysis. So we don't use any kind of weird and wonderful lagging indicators or formulas or, theories. We just look at price analysis and we actually try and predict where the price is going. And yesterday we sort of mapped out how I do my price analysis, and we were looking for a pullback into this box, and we did get that extension. So we'll save the Bitcoin technicals. This is more of a broad overview, these market updates. The technical updates will come about 2 hours after this video. But we're going to talk about the January effect today, and then we're going to get into some other news, guys. I do think, potentially, we are looking at maybe a bullish January. The issue with the January effect is we're in a very tricky financial environment. We have a very aggressive Federal Reserve and central banks around the world. We've spoken in great detail about why liquidity is key to investing. March 2020 onwards, liquidity was free flowing. It was getting pumped everywhere. It was going into meme coins and Dogecoin, and everything was going up. You had all these little crappy cryptos that were just going to the moon, basically, because money was abundant. That's now the opposite, and the Fed doesn't come along with a vacuum and take that money out of the system, but what they do is redirect it into the debt markets. We've covered all this in great detail. But the January effect, so at the end of last year, you have tax harvesting just before the end of the year. This is where people will sell, potentially at a loss, only to buy back literally the following day or today when markets are open. And this is going to be quite an important market update because, of course, the traditional markets are open. We've got the dollar up, we've got gold up, and we've got the stock market up. We're going to talk about that because Tesla, I actually think, after having a very harsh end of year, may actually start the year rather positively. And this, of course, is going to have repercussions on the stock market, which our market is very correlated to. But let's focus on the January effect, ladies and gentlemen, which, of course, is where people buy after tax harvesting in January. So, January effect, what is in the stock market possible causes? So, what is the January effect? The January effect is perceived seasonal increase in stock prices during the month of January. Analyzers generally attribute this rally to an increase in buying, which follows the drop in price that typically happens in December when investors engage in tax loss harvesting to offset realized capital gains, prompt a sell-off. So at the end of the year, you have, and we had a really harsh end to the year. We use the S&P as an example. You know, this was the end of the year, this big candle. So this is your tax loss. Does that now... Do we have some sort of a reassertion here? Now, we've done lots of price analysis on the stock market. Everyone's looking at a 2008, including myself, and a kind of deep recession, which has a kind of Lehman's moment attached to it, where everything just free falls. Now, I think the yield curve is predicting that, but I don't think it's going to be as easily predicted as everyone is currently on right now. You know, I do think there's going to be some tricks, and I think one trick may be the fact that we may get a rally and we may get confidence put back into the markets just before we have that drop. We've kind of compared what I think we're going to go into as a March 2020. You know, you get this beautiful rally, up 60% for Bitcoin, everyone's super bullish, and then they get their pants pulled down and they have to basically capitulate at the bottom. That's kind of what I think we're going to set up for at some point this year. So we are observant of that, but we also want to acknowledge the fact that we want to be investors in a space that is only going to go one way, and that's up if you invest in the right projects. Some of the cryptocurrencies that are here today, ladies and gentlemen, are going to be the future operating financial systems of the world. So the January effect. Another possible explanation is that investors use year-end cash bonus to repurchase investments the following month. While this market anomaly has been identified in the past, the January effect seems to have largely disappeared as it became widely known. So this is the thing with everything. Once something's widely known, it tends to have less of an effect. And if we look at Bitcoin, and I'm going to pull up my beautiful rainbow chart that we've been looking at for years now. You know, this was kind of when we were just before the FTX spill. We were looking at maybe how this plays out, and we were coming up with some scenario forecasts. And we pretty much kind of are where we were looking at. Let's put it on log and let's take a look at how the start of the year has been. Every time we change colors, guys, it's a new year. We are going to do another video later on today talking about the Bitcoin 4-year cycle theory. Is it really just that easy that you just have to wait until the halving comes around and buys? Now, I actually have a, considering I'm a crypto enthusiast, I am not bullish on Bitcoin. I think it will go up, yes, but the long-term trajectory of Bitcoin, I'm far more bullish on smart contract altcoins. But we have expressed this previously. But if we look, you know, obviously the start of this year or 2022 was obviously a bad month. Obviously, we've got January in 2021, which was a good month. January in 2000 and I've lost my bearings a little bit here. 2020 was a good month, and then of course bad month, bad month, bad month, bad month, bad month, bad month, okay month, and so on and so forth. So it's kind of mixed. It's more leaning towards it might maybe a bad month. However, I do think that if the stock market rallies, you know, the Asian Pacific market trades mixed as region kicks off 2023. So remember, markets are opening for the first time today. The traditional markets are the first time this year today. And ultimately, the Asian markets are showing us that it's mixed. UK markets are actually doing very well. The FTSE's up significantly. Gold's up. The dollar is up. And the stock market futures is up. So we could be in for a green day. That's my analysis for today in terms of cross market. We will do some technicals on Bitcoin because we did pull back to the box, we'll call it the magic technical analysis box that we were looking at. And also you got Tesla reports 1.31 million deliveries in 2022. Growth of over 40% over last year. But remember, we're coming out of, you know, the kind of lockdown scenario. So there may be a bit of an increase there. Expect more minor capitulation and bankruptcy in 2023. And then this is a tweet from Michael Burry. Inflation peaked, but it's not the last peak of this cycle. We are likely to get a lower CPI, possibly negative in second half 2023. And the US recession by any definition. The Fed will cut and governments will stimulate and will have another inflation spike. It's not hard. So this is kind of what we're looking at, you know, but we really want to get on the right side of this. So we want to front run when we think that they're going to bring rates down. However, typically when they've brought rates down in the past, it's been on the back end of something seriously going wrong, and there's been a capitulation on the back end of it. And this is why I'm saying that we're looking to set up for another March 2020 scenario. Let's do this. Let's do this. I'll tell you what, no messing around here, guys. Where the government's actually started to, this is the Fed funds, reduce interest rates. You can see the correlation. Initially, it went down, but then, of course, they benefited from this only to set up for March 2020. And then, of course, if we maybe overlay the S&P to show you a similar scenario, you know, you can see government's brought interest rates down. Markets went, yes, this is great. Boom, boom, boom. Only into a catastrophic event, which is why they were bringing the rates down. Similar scenario in 2008. They started to bring rates down. Markets initially rallied, only for the reality of a recession to kick in. And you've got to think, when everyone's broke, when everyone's struggling, you know, when cash isn't free flowing and it's getting redirected into a very overly indebted society, markets don't tend to flourish. So this was just a short and sweet one. This is your general cryptocurrency market overview. In my opinion, you don't get analysis like this on any other, well, I wouldn't say any other. Most crypto channels have got no idea about any of this stuff. We do, and that's why you should hit the subscribe button. If you've enjoyed this video, a like is always appreciated. So is a comment. If you can go ahead and do that for me, that really helps me out in terms of the algorithm and continues to keep me motivated to continue to make videos. Hopefully this is useful for you all. I'm going to love and leave you on that note. If you enjoyed the content, again, a like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video, ladies and gents.